Thank you very much for that very warm welcome, and I'm absolutely delighted to be here on my first international event as CIPFA President. Across international boundaries, sustainability is a key priority, but sometimes in the day-to-day grind of setting budgets, preparing accounts, performing audits and simply getting the job done, it can be easy to forget the role that we as professionals working in public finance play in delivering on the issues that impact us on a global scale. Sustainability matters to everyone. It's about the capacity to continue operating into the future, whether we're talking about a business, a local authority, or the global population. It's about leaving the world in a better place than we found it, and it's about creating a world that works for the next generation. It starts with recognising that there are fundamental environmental limits to human activity. If we are to survive long-term, we have to find ways to live within those limits by building environmental considerations into everything that we do. This is where the UN's 2030 Sustainable Development Goals come in. The 17 specific goals that the UN have set all add up to a just and healthy and prosperous society that does not jeopardise the environmental system that enables our survival. However, the goal that stands out to me as underpinning the rest is goal number 16, peace, justice and strong institutions. A peaceful and just society requires governments, civil society and communities to collaborate on solutions that last. Policy must be applied equitably by national and local institutions that are transparent and accountable to the citizens they serve. Professional accountants are at the heart of this agenda. Public sector accountants and auditors occupy a critical position within government, holding the financial reins and ensuring resources are used to secure the best outcomes for the communities that they serve. As we face up to global challenges such as a rapidly changing climate and a growing population, the best public finance initiatives will be those that build sustainability and long-term thinking into their planning to ensure quality services are delivered to taxpayers in the years to come, as well as in the immediate future. Such initiatives can materialise in all areas of public finance. Taxation, for example, can help society achieve a more sustainable future if we recognise that future economic growth cannot be at the expense of our environment or detrimental to social value. Governments have the option to consider ring-fencing tax income to support sustainable initiatives. However, such taxes need to be supported by citizens and outcomes need to be measured carefully. There is, of course, an economic dimension to sustainable tax policy, including employment rates and the impact of technology. If advances in technology impact on employment levels, this in turn impacts tax income to fund public services. In the UK, for example, income tax and national insurance make up 43% of taxes raised by the government, with corporation tax only representing 7.7%. So in the UK, lower income tax receipts would have a significant impact on the public purse. So we need to think carefully about how tax is raised. Should robots pay tax in the future? Should we tax online transactions and activity differently to ensure the sustainability of vital services like education and health? These are all questions that need to be considered as we move into the future. Taxation is only one example of areas in which public finance professionals can be a central influence on sustainable development. Key to achieving and moving forward towards a position of sustainability is the need to fully understand the essential components of public financial management and how organisations at all levels of government relate to one another, just as the SDGs themselves try to capture the essential components of a just, healthy and prosperous world. Only by taking a holistic view of public financial management and highlighting the unique characteristics of the public sphere can we strengthen our institutions, build capacity at all levels and focus our thinking on how to improve its public sector sustainability. This is where the CIPFA whole system approach comes in. The approach to public financial management considers all of the elements that influence the way in which the public service delivers services and achieves its social outcomes. It's specifically designed to be applicable internationally, and we believe it could have a strong role to play in underpinning a move towards sustainable public finances here in Sri Lanka. The CIPFA approach gathers the elements that make up strong public financial management into three broad categories: governance, external elements, and internal elements. Good governance is reliant on acting always in the public interest, openness and transparency, long-term sustainability and accountability through reporting and audit. And as public servants, integrity, ethics and respect for the rule of law must be central to our work. The outcomes we define for our services must be sustainable in order to help our economies, environments and societies flourish, not just today, but into the future. We must rigorously analyse and evaluate interventions we introduce, consider the risks and ensure that we are doing the right thing. And we must develop the finance profession to increase capacity and build the technical and leadership skills needed to enact good governance and achieve sustainable outcomes. A public sector entity's operations are influenced heavily by the external elements that can influence an organisation's operations, including legislation, standards, transparency and scrutiny. Internal elements can include strategy and planning, budget execution, performance monitoring and stakeholder reporting. These principles are all underpinned by accrual accounting. Understanding the economic substance of financial transactions is essential to good decision-making, delivery management and accountability, as well as the transparency that strong public financial management requires. However, it's important to emphasise that the whole system approach is a generic model. CIPFA recognises that strong public financial management is only one element in improving public sector performance. CIPFA would expect that the design of a financial management system would be tailored to suit the local context, and the implementation would be progressive. However, for public sector performance to be optimal, we in this room and in the profession around the world must understand both the internal and external factors affecting public financial management and design our services collaboratively by reflecting the full range of processes that make up the whole system and collaborating on an international scale. We, as accountants, play a central role in aligning sustainability ambitions across our national public sectors to ensure all parts of the system are moving together. I'll leave you with a final thought. Across the globe, the public sector needs to set a clear direction, a shared vision made up of values and collective goals that we can all not only get behind, but play an active role in pushing forward. This cannot be done by any one organisation, government or country in isolation. As stated in the last of the UN's 17 goals, a successful development agenda requires partnerships between governments, the private sector and civil society. Inclusive partnerships like the one CIPFA is committed to continuing today with CMA Sri Lanka that place people and the planet at the centre will be key to achieving a world and a society that we're proud to pass on to the next generation. Thank you for listening.
Thank you, Carolyn, for cantering through your presentation.